Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate filings. And let's just say our subject today has quite the administrative hiccup that might have you checking your own meeting schedules. Get ready for a deep dive into American Resources Corporation's latest report, where we'll see if they're keeping their promises or just missing meetings. Before we dive in, if you love getting straightforward insights from these official documents, make sure you hit that subscribe button. And hey, hop over to our Discord community. The link's in the description below for more real-time discussions on these filings. Scroll 12,115 Visionary Way, Suite 174, Fishers, Indiana, 46,038, scroll. Alright, so this is a current report, meaning something important happened recently. What is the big news? Well, American Resources Corporation, or ERIC as they're known, got a letter from Nasdaq, and it is not a fan letter. They were told they're not following a rule. Specifically, Nasdaq Rule 5620A, which is a fancy way of saying they missed a deadline. Companies listed on Nasdaq are supposed to have their annual shareholder meeting within 12 months of their fiscal year ending. ERIC's fiscal year ended on the 31st of December 2024, and they did not hold their annual meeting within that next 12-month period. This notice of not being in compliance sounds serious, but thankfully it does not immediately affect the trading of ERIC stock on the Nasdaq capital market. The company has a chance to fix this. They have 45 days, so until the 27th of February 2026, to tell Nasdaq their plan to get back on track. This plan has to include when they will finally hold that annual meeting. If Nasdaq likes their plan, they might give ERIC as much as 180 extra days from their fiscal year end, which is the 29th of June 2026, to hold the meeting and become compliant again. So it seems like a paperwork issue and a scheduling mix. The company says this delay was administrative and not due to any arguments among shareholders or the board. They are already working on their plan and getting ready to schedule the meeting. They sound pretty confident they can sort this out. They expect to hold the meeting within the permitted time and regain full compliance. Honestly, it is good to see that this isn't a sign of deeper trouble like financial woes or major disagreements, but it does make you wonder about the internal processes that let a deadline like this slip by. It is a reminder that even seemingly small administrative steps are crucial for public companies. Now, usually these reports have a lot of financial tables we can dig into, giving us a real sense of the company's health. This particular filing as an 8-K is for significant events, and in this case, the significant event is the notification from Nasdaq. So we don't have the in-depth financial statements we might see in a quarterly or annual report. Scroll exhibit number 99.1 scroll, however, they have attached the actual notification letter from Nasdaq as an exhibit. This is essentially the proof of the situation we've been discussing. It is the formal document spelling out the non-compliance. Scroll B per S per milliampere RKC Jensen. Scroll the report is signed by Mark C. Jensen, the executive chairman. This tells us he is a key figure overseeing the company's strategy and governance. So what is the takeaway here for American Resources Corporation on the surface? It's a clear administrative misstep that caused them to fall out of compliance with a Nasdaq rule. The good news is, it seems to be a fixable problem with a clear path forward. They've acknowledged the issue, stated it's not due to internal conflict, and are actively working on a plan to rectify it. This suggests the core business operations are likely stable, but it does highlight a potential weakness in their corporate governance or operational oversight. The risk here is minimal if they execute their plan effectively. The main opportunity is to demonstrate that they can manage their compliance obligations proactively going forward, which builds investor confidence. For now, investors will be watching to see if they successfully submit and execute their plan to hold the annual meeting by the extended deadline. It's not a red flag about their business model, but it is a yellow flag on their operational execution. Alright, that is our quick decode of this ERIC filing. What's your take on this administrative blunder and what it means for the company? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more regular corporate insights. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one.